Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day video for Tuesday. Another turnaround Tuesday, but in the wrong direction for the bulls, with the S&P down about 1.5%, the Q's down the same. Look at IWM down 1.7%. That was holding up in the first couple of hours of the day. Again, you just kind of have to laugh at some of this price action because I thought that was interesting. I was like, IWM is kind of hanging in there. I think for the first hour or two, only down about 20 basis points, and then really slid throughout the session. We'll go over all those charts in just a second. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So, once again, this September has been pretty disappointing in terms of, if you start to see some things that are interesting, like I did yesterday. I talked about uranium and coal stocks and a few other groups, such as energy, strong yesterday, but little to no follow through. And that has just been the situation that we have on our hands. One of the things too that's, well, we'll talk about that in just a second, so I won't get to that first. But I can't believe I've gone through a minute or two of this video and haven't talked about bonds. Yes, extremely boring, but this is the environment that we're in right now. Just amazing to me that bonds were up this morning, specifically like TLT or what I'm looking at here, the 30-year bond futures. They tried to put in a little bit of a bounce like they did on Friday, and just sold off again, and this is just one of the most interesting times I've seen for bonds like this, to just continue to move lower, which means rates are going higher across the board. Here's what this looks like. But this is just such a fast move that is taking place right now in bonds, and that is in my opinion, like this is providing, let's see if I could blow this up a little bit. Sorry about that. Yeah, this is providing the pressure to the market right now. It's like it's like every time equities want to, do something positively, you have just rates applying so much pressure right now. So yields up again. This was already after a big move. The 10-year up to 4.55. None of these are up to 5% like the 2-year is, but they are moving there, and they are moving there quickly. 20-year up to 4.87. That's the closest to 5%. Kind of just feels like it's inevitable that these things go up to 5%, but it certainly just is a grind type move, and similar a grind lower in the in equities right now. But the 30-year right now is at 4.68. Just to give you one other visualization, looking at what TLT has done. Remember, on Thursday, the day after the Fed met, bonds went down 2.6%, which is a huge move. Let's see if I can get this. Yeah, the average true range for TLT, just to give you kind of some perspective about how much TLT normally moves, the average is about $1 or $1.25. I think more recently it's like right now it's about $1.10, but previously it's $1.25. When there was higher volatility, it was more about $1.50. So when you see this move over $2, you know that you've got some pretty decent volatility that's going on in the Treasury market. So that's the story. And again, I'm simplifying here a little bit, but as long as these interest rates are going higher like this, it just feels like there's a lot of computer, algorithms that are programmed to sell stocks when they see interest rates go higher. And that's part of the story. And then, this kind of goes hand in hand, just the dollar. And this is just incredible since the middle of July. I mean, just straight up and to the right for the dollar. Where does this go to? Does this go all the way up to 30, which is, a virgin point of control that's up there? Let's see if there's any other. Yeah, I think 30 is really where this where we could be going here in the dollar. And usually I say, hey, things don't usually go in a straight line, but this move in the dollar is moving has been moving in an absolute straight line. It is a little bit overbought at this point, but who's to say it can't go up a little bit further to 30.18? Again, it's literally, watching this unfold every day. It has been a lot like just repeating, like a broken record, with the dollar stronger and yields higher. So very interesting moves that are taking place. Now let's talk a little bit about equities. Are we where there's support? Well, I mean, it depends on what time frame. And at this point, it's a bit of a guessing game where buyers are going to come in. It seems like almost every day we're taking out a level in either the S&P or in the Qs. If you look at the 1 hour chart, the word that I've been using is when we approach one of these red lines, right? Virgin point of control, where there's a lot of buyers and sellers that have previously met up. And if we just slice through it, that's the word that I've been using. It's, that there's just too much selling pressure. And so we did hit one of these at the end of the day, and we'll have to, we will have to see if this is the one that might provide a little bit of support. I just don't know yet. It's too early at this point. And it's the same thing when you approach a support area, right? What you want to see, in my opinion, right, in terms of trading, you never want to just go out and start buying something once something gets to a support line. You want to watch what the reaction is. Are buyers coming in at that area and making a stand? Then you're kind of onto something. Then you can begin to watch for further confirmation, such as like the 5-period moving average, 20-day moving average, 50 moving average. But this is going to take some time. One of the things that I like to do as a trend trader is for, really have whatever I'm trading, at least over the 50-day moving average. This is going to take some time, now that we're deep under the 50-day moving average, for price to kind of come back. And, and who knows, we may go down a little further, we may go up a little further, we may go sideways. That remains to be seen. For now, we're also pausing. The S&P does have a 200-day moving average, which is right there. Again, that's going to be a little bit different. Some people use the SPX, some people use SPY. That's all going to look a little bit different. But you could say, hey, whatever it is, by the way, whatever you're using, whether it's volume at price, what I use, which using value areas, whether it's, some people also like to use anchored VWAP. I don't particularly care for that because you have to anchor that yourself, and that's subjective. I prefer, and I like using volume at price. And so there's a similar concept there with using anchored VWAPs and the value areas. They both rely on volume at price. I just like when you take the where you don't have to draw the lines yourself. I like to have automatic so that there's no way that I can mess around with drawing another line at this low or that low. But regardless, whether you're using that, whether you're using volume, whether you're using the TTG MarketWebs value areas, or whether you're using a moving average, right? As long as you're saying, I'm going to, like, you're using that, you have a stop price and say, hey, I can go long versus the 200-day moving average, right? And if it doesn't hold, I'm out. That's the important thing, right? In trading is to, you could use another moving average. It doesn't have to be the 200-day moving average, but I hope you get the point as far as trading goes. You have to understand that you want a level to know where you're going to be wrong. Everybody's wrong in trading, right? Some of the when you first start off at trading, or when I know people sign up for services, I saw this the other day, somebody posted this and they're like, geez, this person who runs a service, they're wrong a lot. Well, everybody's wrong a lot. It's just a fact of trading, right? We know that Jim Simmons, who's one of the best traders in the world, like, he has all kinds of stats on his trading. He's only right about 51% of the time. So what he does on the other 49%, because he's wrong 49% of the time, he really is cutting off those losses very quickly. So that's the point that I'm trying to make with whatever you use here, whether it's the 200-day moving average or something else, as long as you get out very quickly when you're wrong, because you're going to be wrong a lot in trading. I hate to break it to you or to anybody who's new and thinks that they can sign up for whoever's service and think that they're going to be right all the time. It doesn't work that way. So that's what I see for the S&P. Again, it's going to look a little bit different with SPY, right? The main thing to realize here too is we are below the August lows. 200-day moving average is down here, and yes, that's not oversold, right? Another thing that we've been talking about too, before I go to the Qs, right? If you look at the McClellan oscillator, right? It's one of the points that I've been making when we started to sell off is that we're not oversold. You know, we got to this low down in August, and the McClellan oscillator got into oversold territory, right? And that's the NYMO. You could use stock charts, and it's $ NYMO, and we're not there yet. Well, we'll see what the reading is after today, but I suspect that we're getting closer. But I don't think that we're oversold like we were, you know, where we've got deep oversold levels like we were back in August. So the Qs, they were holding this August low. They broke through that, right? So the Qs, we're kind of caught in no man's land here. So I don't have a good level for you here to say, hey, we made some progress. We're below the value area for the week, and really some support would be at 350 in the Qs. Right. And again, you're not going to find much here on the weekly chart, you know, close by. This is an ugly pattern, and you know, to me, it means that there could be some more downside, but we don't really have anything down here either on the daily chart for a while. So if this wants to continue to go lower, and if there's more selling pressure, I think the Qs have more to fall. But you know, I'm not taking a long position in anything, you know, really too much in this area. I think that with interest rates, you know, unless interest rates change direction, right? This is the group that's in my opinion is most vulnerable right now. Higher growth stocks, and I'm amazed. I still see people they don't make it. You know, I'm not picking on anybody, but when you have interest rates move like this and the dollar, right? You do want to be looking at different groups of stocks, in my opinion. Some people, they only like to look at a certain group of stocks. That's fine when the market is doing one particular thing. You know, the alternative is that people, if their stocks are not in vogue, if they're not trending, then they kind of stay out of the market. That's okay too. But there are other places, you know, of course, when interest rates are moving higher, there's going to be better places than into high growth stocks, which is what I also covered in yesterday's video. So yeah, not a lot to go on here. Like I said, the VPOC down here is at 350. IWM, as I mentioned, was kind of holding in there in the beginning of today. Notice where it got rejected. Right now, we did take out this version point of control yesterday. We had a nice little bounce, but the bounce. So again, like if you played this bounce, you know exactly where it's not going to work. And once we broke the value area, there's no point in being in this anymore for a bounce, because it lost the bounce area at 176.56. So notice the retest. Right, so the you know, the valuer is giving you some really good information, because there was a try there this morning to get into value and it failed, and then we just started kind of drifting lower there in IWM. So where does this leave IWM? We did finally take out that virgin point of control to the downside. I've mentioned this a few times. I did not play this short. If you did, congratulations, but we now took out a pretty decent downside level there. So IWM, that's also you know, crossing some more dotting some more I's and crossing some T's in terms of some levels. So this would be a logical place for a bounce in IWM. And again, I don't know if that holds, but we'll see. I mean, that's a virgin point of control takeout. So I find that's interesting. So basically that's kind of it. You know, that's when we have a day like this. I do like to measure breadth on days like this. If you look at my indicator down here, you could see that this was a pretty heavy selling day, good selling pressure. Sometimes when we really get a good washout, it could be a contrarian signal. Again, I don't think that we're there quite yet. This is a 5-year chart. What our breadth indicator looks at is down volume versus up volume, right? And this is just NYSE, by the way, that's being charted on Bloomberg. And you could see this is a decent reading. Is it as big as, is it an extreme reading? No, it's not an extreme reading. And you could take a look at some of the other times where we've seen really a big washout. There was one in June. of last year, and we did have a really nice move after that. Notice we had another washout in September, and that was very close to marking the lows where we got to in October. Again, you had to be patient with that, but also notice the price action last around this time last year, right? Looks a little bit similar. Now we don't know what this is going to be for the rest of the year, but the seasonality has lived up to the hype. So again, a pretty decent selling pressure day, but not extreme. All right, so just wanted to mention that. Stocks that I think are of interest, both to the downside and to the upside. Apple did finally break this value area. Maybe this is on its way to the 200-day moving average. Perhaps watch the low in August, which is where we're at as well here. And I think we did break that. Yeah, just barely. We broke it. And I think the next level down there is 160 if you're looking to short Apple. Not my favorite short, to be honest, but it is what it is. It looks like another one of these head and shoulders type patterns. I wanted to talk about just a couple. I don't bring up NVIDIA every day in these end of day videos, but I noticed it actually held in there decently. Notice that it got into its value area for the week. This was yesterday. This was Monday. I actually tried to trade for a little bit in NVIDIA this morning, and obviously it ran out of steam, and I got out of it fairly quickly. And I did that based on the 5-minute value area today. I tried the break here. I got one target and then gave it back. Gave back the shares. Sold them. That's a nice way to say it, right? I sold right on this break in here, but you could see it tried a couple times today to break its value area, but just couldn't do it. And then the other name that I was going to talk, two more names I'll talk about, which was SMCI, which saw some call buying. Again, not horrible, finished up today and managed to stay inside its value area. So again, so as long as you have some levels to watch, and I would watch this 243 level, and I'm still holding on to a very small piece. I did take some profit targets on the move up. I got what I was looking. I knew that this was going to be it was going to be tough for this name to break out of its value area for the week, right? So it did move in, nice move yesterday. Little bit of follow through, but ran right into that resistance at 253. So again, especially on days like this, the value areas give you a sense, when it's a pretty crappy day in terms of breadth like today was, right, that you're just not going to see too many breakouts. So the value areas give you a sense of like, hey, even if it's like for a couple bucks, at least you know where your resistance is. And that was right at that 253.34. The last name that I'll talk about is ELF. Just notice I didn't even I was not trading this name or didn't really, I glanced at it a couple times, but again, it took out a downside VPOC last week, and since then has been so this is more what you want to see once one of these virgin point of controls is taken out, is you want to see some digestion and start to float back up a bit. Notice it's right around that 5-day moving average. So if you're not in it like me, watch to see if it can reclaim this 5-period moving average. All right, guys. But note this was a decent break of the trend. So it may spend some time, maybe going up a little bit further, and then maybe putting in some type of like a double bottom or W type pattern, if possible. Again, predicting, so who knows what which I don't like to do. So who knows what could happen there. Guys, have a great night. See you tomorrow.